Vodafone. Gautam Chhaochharia as well joins in. Gautam, hi, morning. And that's exactly the point that I want to talk to you about as well, because you too have been tracking the telecom story for a bit. I mean, this is almost on the brink of Vodafone actually packing shop from India.
So it's difficult to say what they want to do. We also read the same media reports. But the telecom stress has been fairly well known and well flagged. And finally, for the last few weeks or say 2-3 months, we've also seen finally the government also kind of trying to see or explore ways to resolve the stress in the telecom sector. So the big difference now is, I think, we are seeing the policymakers also wake up and trying to ensure that telecom sector survives in some form or the other in terms of the players who are at the margin.
I mean, we are saying, okay, digital is the only way. India is connected, great brand bandwidth, very low calling rates. India is becoming a digital economy, whether it is payment or healthcare or even media. How should one bet on the this new proposition of digital media? You cannot buy telecom. Media is too fragmented. All the action is happening in the startup space, and the typical Indian IT companies, what they're doing is that they are still continue to run models of software services, not pure digital. So digital is this big opportunity for every investor. How can one participate in it?
So clearly in the listed space, we have seen a constraint in terms of participating in digital space. We can't talk about individual companies, but there are other businesses trying to benefit from that, both as an enabler for their existing businesses to take an edge over competition, as well as businesses trying to leapfrog into this to be market leaders, not necessarily existing digital companies. So there are companies, but yeah, compared to say the US market or China market, India still lacks the breadth of digital or the new age internet businesses.
Okay, Gautam, the conference. It's coming at a time when markets are at an all-time high. Fund managers have underperformed their benchmarks. We are in this turn where it appears that the worst is behind us, but markets have run up already in anticipation. So what is the mood like? What is the advice like? And what are you telling your clients that where can they make the next 8-10% return in next 1 year?
So the investors' mood is clearly, I would say, hopeful, not necessarily overly optimistic or upbeat. And why I say hopeful is it's in the context of what's happening globally. So again, given the global growth slowdown, India's slowdown is not necessarily a big negative for the global investors. Secondly, as we have seen early signs of bottoming out and policymakers being more responsive, so that's also giving hope to investors. And then lastly, the investor community, global investor community, still remains hopeful about the medium-term growth potential, given the reforms agenda of the new Modi government, and specifically around corporate tax cuts, etc. At the same time, there is definitely a lingering worry around the NBFC and financial sector stress, which has continued to get prolonged. Every year, the markets keep hoping that it's the bottom, and we see this getting prolonged. So that worry still seems lingering for investors, and that's one of the common questions we get these days from investors as to how big and how serious this is. But thankfully, there also, unlike say a year back or 2 years back, we are seeing more proactive policy interventions, which should be reassuring.
Gautam, let's divide your current proposition or your current portfolio advice in 3 brackets. Evergreen businesses, B, businesses or companies where currently disruption has happened or currently the market outlook is very poor but they will bounce back, and third, companies which could be called as early birds, where you can catch them young and they can become big businesses. So give me one idea each in the 3 categories: evergreen compounders or the big picture winners, disruptors or beaten down angels, and early birds.
So I can't talk about individual stocks, but firstly, the evergreen ones are clearly in the financials and consumer space. The private banks are the obvious ones, specifically backed by retail liability franchise. And consumer also, there are select opportunities in home improvement, etc., where we continue to see great long-term structural stories which have managed to deliver well even in the current slowdown. In terms of some disruption, some beaten down, the obvious space in our view is in the oil and gas or the broader SOE space, specifically because we see a clear high probability of a big privatization agenda coming through over the next few quarters, which will obviously be a great for the overall market, but will be a significant re-rating driver for a lot of these SOEs which are trading at very attractive multiples. Early stage, we do have a mid-cap coverage in terms of long-term compounders, but again, there I would caution is, unlike the broader mid-cap world, which has been clearly beaten down and underperformed over last year and a half, 2 years, the quality names which to us are compounders and early stage have not come off so much. So markets in India have been quite efficient and they seem fairly priced, but there are enough opportunities there in the media space, in the healthcare space, in entertainment space, where we see long-term compounding opportunities for small companies.
Sure. Okay. Gautam, what about, we've been talking a lot about the divestment agenda from the public sector space. Anything that's looking interesting to you, or how closely are you watching those developments?
So we have been watching that closely. We've been publishing on that theme as a broad market driver also, because the broader SOE basket in India is still trading at very attractive valuations, both versus their own history compared to absolute bottom-up fundamentals, as well as compared to relative valuations versus markets. And again, some of them do have some specific issues which justify these valuations, but the broader set looks attractive to us. And within that, the oil and gas SOEs are the ones where we could see something imminent, and there have been media reports talking about specific companies also. And why we think privatization is quite likely. Beyond the media report, the simple logical argument there would be that this government for the last 5-6 years has been focused on macro stability and keeping fiscal discipline intact. After the corporate tax rate cut, the tax revenue slowdown in the recent months, there's no way they can meet the fiscal targets, and not just this year, for the next 2-3 years, unless they have a more aggressive privatization agenda. Because piecemeal divestment is fundamentally constrained, one, by how much stake they can sell. Maybe they go down below 51, but how much below 51? And secondly, the valuation they realize in a piecemeal is significantly lower compared to privatization. So our estimate is that if they do privatization, the value realization could be 2 to 3x broadly. And if they do privatization, which means sell the entire stake versus piecemeal, the visibility on revenues for the government by sell down is going to be in 10, 15, 20 years rather than the 3 to 4 years through piecemeal divestment.
One closing comment. Are you convinced that this investment drive is going to happen, or it's all smoke and mirrors?
So we assign a very high probability of privatization to happen. Whether it happens in the next one to 2 quarters or next 1 year, that's difficult to time, obviously.
Do you think there is money to be made in PSU stocks? Because for the longest time we've interacted on various forums. You always put not one hand, but both your hands up and say, I don't like PSU stocks. I don't tell my clients to buy PSU stocks. I don't know what is happening in PSU companies. If you believe that disinvestment drive will happen, do you think State Bank of India, BPCL, Container Corporation, SCI, it's a long list. We both know the names. But would you tell your clients to buy from that long list, which we can't talk about it, but it is obvious for viewers to understand?
Yes, so the specific companies which get disinvested will definitely have meaningful upside from here. And even the others which don't get disinvested, the investor focus will come back to the underlying value in them.
All right. Gautam Chhaochharia, appreciate your time. Glad you could join us, and good luck with the conference.